Says we're live. Okay, we can start.
Good morning, guys. Something new. We've been going live every Wednesday, every Saturday on TikTok. Got to be pushing a couple of years. Now we're going to try it here on YouTube. Why? Because we're putting out clips and videos about trading, trying how to make money in these markets. And now we figured we'd offer it out at YouTube and see if it's just as successful as we are on the other platforms. Excuse me. As you notice, the markets have changed. Since January, since we have a new president, the market's going through a transition. And as people are noticing, they're losing some money real fast. And I think they're actually going to notice this at the end of March when they get their quarterly statement. When you look at your IRA, your 401k, even your pension, you're going to see adjustments. And they're not going to be good because you're always long these stocks. We found a way. We've been doing this for years. I've been trading, got to be pushing 4 decades now. And there's times that we always say, there's times to make money and times not to give it back. And this is the time not to give it back. We do a lot of navigating. We trade with reasons, and it keeps us in the game. Want to know something? We're at the tail end of March. We're up over 40% for the year. Last year, the same style. We do a little investing and a lot of trading. Last year, we're up over 100%. But this year, just being up is going to be an accomplishment at this point. Right now, people are getting a little euphoric, feeling comfortable, and they get hurt. It's happened week after week, and we've been going over this every week. We have opinions on a lot of things. Why? Not opinions, we have stories to back it up. Okay, there's a difference here. People have the same story in Apple, same story in Google, same story in NVIDIA. Okay, but when they go down, you ask them what changed, they have the same story. We don't trade like that. We don't look like that. We trade mostly commodities because that's usually that's the business I retired from years ago. I have a little more maybe experience in that. So we look for commodities, commodity equity exposure, and we try to take advantage of that. And it's been working. We've been bullish and long gold for the last 2 years, and silver. Okay, now they start to hit a nerve. This is when you take advantage. We've been avoiding Apple and Google and NVIDIA and big name stocks like that because we think they got a little too crowded and we think they're going lower. The problem is now things are starting to accelerate. And this is our edge. You know, the thing they call the VIX, which is basically the speed limit of the market. Well, the market's used to driving at 30, 40 miles an hour. Now the market's driving at 70, 80 miles an hour. Just put yourself in that analogy. Can everybody drive at that speed? No. So while they adjust, the market makes mistakes. There's accidents. So we notice the VIX, so we notice how to adjust. Right now, it's a market of adjustments. Another thing we say, this is not a market to invest in. This is a market to trade. So we've been doing this since January, and it's been working. Okay, it's going to filter itself out, and then you will see that the market can be investable again. But right now, the market's going through a transition. We have 2 extreme different ideas in administrations. So the market's putting that in. The market's rushing into good ideas, what they think were good ideas. They are good ideas, but you got to pay attention to where you get in. Why do you want to be in now? Do you want to be in something that's crowded? Because when you're in a crowded boat, we use an elevator as an analogy. When the market is crowded, okay, you don't have to worry about your idea. You got to worry about the person next to you and next to you because they might not have the tolerance you have. And then the market starts to get the snowball effect. It's having a snowball effect on the downside now, starting to hurt people. You're going to see it yourself. I don't know how experienced you are, but how many people now are going to say, I don't want to open up my envelope in a couple of weeks when you see, I don't want to open up my statement and see what my 401k is. I don't understand that. You work your whole life to put this money away. You want to know where you stand. So there's opportunities here, and we've been taking advantage of it. Okay, just give you an idea. Every Saturday and every Wednesday we do a live. We have clips all day. Belong to RNTR. We're part of the group. We have a live chat. It's a group. You're looking over my shoulder. You watch what I do. If you want to do it, you do it. But it's more trading. It's more navigating. And at times it's more avoiding. And that's what we've been doing now. We think in the last, our opinion, our inflection point was Valentine's Day. We thought the market would get a little euphoric into Valentine's Day in turn. So after that, instead of trying to make money, you try to avoid losing money. And that's what we've been doing and getting opportunities. Think about it. We like the gold market. We like the silver market. Every time we pull back, those are the ones you buy. They keep going higher. We don't buy Google, we don't buy Apple, we don't buy Nvidia because we think they still can go lower. And we're getting the confirmations now. And it's going to continue. I think there's many more weeks of this. Why not take advantage of it?
We have a question from Stevie. He said, "Hi Joe, what a great call you made in Tesla. Didn't see that coming. Can you talk about that?"
Yeah, that's one of the edges of the market. Okay, you talk about a market that the market's adjusting speeds. Remember the speed limit we just talked about? Well, the VIX went from the low teens to the low 20s. That's the speed limit moving. So what do? You have this giant first move, and then you have a second move, and then after that, the market goes like this. The market bobs because it's digested all those moves. It's recalibrating. You take advantage after it recalibrates because then the market they got scared being long Tesla. They got scared being long Tesla again because they got burnt. Then you get to a point where something goes from 500 to 250, you can start to pick spots. And then the sentiment. Okay, we're live all day. We're on chats. We're on social. I'm not a social media guy. Okay, our team is. We're on and the sentiment on Tesla was bullish, bullish, bullish. And then in the 250 area, it got bearish. Imagine going from 500 to 250 and now everybody's bearish. What they're doing is they're putting their emotions in the market. Okay, they're not anti-Tesla. They're anti-Elon Musk. They're anti-Tesla, the stock. If that had any other name, that would be a buying opportunity. But because the sentiment was against that, and we don't do that, but it's information. We take advantage of information. That's why we caught Tesla. We traded Tesla twice this month. Okay, Tesla's gone from 500 to 250. We made 80 points being long Tesla. Once we made 30 and once we made 50 being long, not short. Okay, now we're out. We wait for a spot. That's the way we look at the market. There's other ones out there.
All right, guys, give your questions, any trading questions you have in the comments here. Give us a like, give us a share, follow. How about we go into some of your other stocks you've been looking at for this week?
Okay. Now, this is something we looked at yesterday. Why? Because we've been bearish. Okay, we have not been bullish in the market. But you got to get to these certain points where the market starts to breathe or pushes itself like a magnet into a line because it scares people. We're close to that right now in the NASDAQ. And we don't trade. We don't trade indices. Okay, we do not trade. There is no edge in indices. People are always asking us, why don't we trade S&Ps and NASDAQ? Because there's no edge. All they're a basket of stocks. So why not cherry pick the ones you like? But we like the market yesterday at the end of the day. Why? Because you wait for something like this. Now, this is the bottom of the NASDAQ. And this was when you had the carry trade unwind. So look, you wait the whole way down to see if you get to this area. Now, this is going to be important next week. You know why? I'm going to explain to you right now. This is an area that I use as a piece of information. Okay, now I'm at a spot where I'm starting to look for stocks. But now you get the end of the month on Monday. Tuesday, the president's going to decide the tariffs are coming out, the whole package, what he's going to adjust, what he's not. The market is nervous into that. So the market can break this line, but what we're looking for is one of these. And then we think the market can have a bounce. And then we will trade something like a Tesla again. We will look to buy, but it's got to happen. If the market goes there and continues to go lower, then you got to get out of the way because these are technical points. So you come in on a Monday and the market's below here, which I think it will be on Monday. It'll come in below here. Now you get the tests. So you got to watch yourself. That's one of the things we do. One of the way we look at opportunities, well, the biggest opportunity, 2 years we've been bullish gold. 2 years we've been bullish silver. Why? I've been a metals trader pushing 5 decades. Okay, I'm giving away my age, just so you know the way the numbers are. Okay, but I've seen everything in gold. I've seen everything in silver. What I hadn't seen in gold 2 years ago, I hadn't seen since I could think all the way back 30 years before this when I worked at Goldman Sachs and watched the metals business. So when I see gold being accumulated quietly, it takes its effect. Look what happened to gold. This has been gold. 2 years have been on this. The whole way. There's no reason to get out of gold. And it's making it more bullish because you could trade gold. We used to trade gold, buy it and trade a little bit and wait for a pullback and put it on, and we were doing that. Then we had this, we waited for a pullback. Now, we read charts, we read patterns. That's not the way we trade. We trade fundamentals, positions, and the charts. Then you get these pullbacks, and they're small. That tells you it's even got more room to go. Okay, when you have this pullback, it makes sense. This is risk off. When you got this, it's risk off. When you get this, it's risk off. Now you got risk off, and gold don't even go down anymore. So gold has got room. Silver's the one you got to pay attention to because silver could be a home run or it could be a strikeout. Now we think silver right now is starting to catch up, but you got to realize what silver's following. If silver's following risk off, then you got to watch yourself. Think about it. If you like gold and you like silver, and you don't have either one on, and gold is on its all-time highs, You say to yourself, I'm buy some silver, I'm going to catch up. That's what people do. It's mentality. It's human nature. The problem is when it's risk off, everything goes lower. So if everything goes lower, everyone's sitting there long some silver. So you got to watch yourself. If it bounces, goes up, then you got another home run. We think silver inevitably is going a lot higher, but it's a hard road. As you can see when silver gets euphoric, gets hurt. When it gets euphoric, you see what I mean? And I wouldn't surprise me if it happened again. Doesn't mean it's going lower, just means it could pull back. So if you have the stomach for it, then you can trade silver. We long-term bullish silver. What we do is we trade a bunch of silver stocks. Okay? That's the way we stay in, plus silver futures. Okay, we have a basket. Usually got a half a dozen gold stocks, half a dozen silver stocks, ones we want to trade, ones we want to get value, and ones we want to navigate, and ones we want to marry, hold on to. And that's the way we stay in the game. And that's why we've been long gold and silver this whole way up.
Okay, we have a question from Matisse. How do you distinguish differently trading between Tesla, Apple, and Nvidia? I ask because most of the trading is by passive ETFs. So Tesla went down Friday as much as other mag 7s or 8s.
Well, Tesla has got sentiment in it now. Okay, the market has put a target on Tesla, put a target on Elon Musk, so it's got emotion in there. We don't trade Tesla the way we would trade the Mag 7s. Mag 7s are in, like you said, they're in everyone's 401k, IRA. They're all in everybody's passive investments. Tesla isn't. Tesla's in the more aggressive investments, more aggressive funds, or if, you choose on your 401ks. Do you want to be passive? You want to be a little risky or a lot risky? Tesla is not in the passive one. They're more in the risky one. So you got to, but now it's different because there's emotion in the market. Now that people think it's going to zero, people are waiting for earnings. People are saying that Tesla's going to become extinct. All right, if you said that at 500, it makes sense. Now it goes from 500 to 250. Now you want to talk about it? This is after the fact. We've made money in a few stocks over the last couple of years. This exact scenario where the market was bullish, got itself bearish on the way down. Then at the bottom, everybody says, "Oh, this thing is going lower." We did that. We caught that 2 other stocks in the last few years, and that was the bottom. And we have these monster moves up. Doesn't mean I'm bullish. Just means there's opportunities here. That's how I put Tesla different than the other stocks.
All right, that's questions we have right now.
Okay, let's go over some of the things we're looking at. Why? Because there are opportunities. What we're looking for now is we're looking for failures. Okay, we trade the markets when they bounce for opportunities. We also look for markets that bounce and everyone gets comfortable. But if you're in a market that's becoming a bear market, they go and they fail. And what happens when they fail? They create traps. And that's what happened yesterday. The market got trapped again. The market looked like it was okay. This is 2 Fridays in a row where the market Monday, Tuesday, Wednesday, Thursday look comfortable, holding, looking well. Then all of a sudden it turns quickly. The problem is when the VIX is up here, when it corrects or reverses, the speed is quicker. So that's what we're looking for now. So we look for failures. We had some failure opportunities in the oil stocks. We like oil down, not around here. We like oil in the mid 60s, 65, 66, 67. In the interim, oil got to $70. It went to a nice little bearish area. This is trading futures, in our opinion, short term, so it could pull back. So what do we look at? We look at some of the oil stocks because they got to areas that were failure areas. Now, we were long ConocoPhillips. We caught this right up, but we got out. We got out at the beginning of the week. Now it went to a failure area. So now we think ConocoPhillips can actually pull back. Okay, if it got up there, we actually would have got short. But this is what we look for now. We look for the market to get comfortable. Think about it. This is what we had. We grabbed Conoco. We rode it up. And then when it got up here, then we hear all the questions, all the noise. Oh boy, oil stocks look good. Oil stocks look good. Okay, you know what that is? It's exactly the opposite of Tesla. Okay, when it was up here, no one said anything. When it got down here, they were bearish. When it was down here, no one was bullish. When it gets up here, they're bullish, so they're all caught a little bit. So if oil breeze, Conoco breeze, we think these can go down. This is one of our failure stocks. Got to an area and failed. Same thing with ExxonMobil. Same thing with a couple of other.
And what's the ticker for that so people know?
Yes. Okay. That's ConocoPhillips. COP. This has been good to us. We caught this a few times this year. The one we've caught a lot this year, which has been really good to us, has been Valero. Why? I've been trading oil equities and oil commodities especially, 40 years. Okay. We had the largest commodity book on the planet when I was at Goldman Sachs. So you get to learn all the nuances. One I learned about, because I had great teachers, was about the gasoline and heating oil market. Okay, these are the byproducts of oil. So we have a little bit of an edge in gasoline because I see things that people maybe see after the fact, and we get involved. So we trade gasoline on equities. We trade through Valero. We've caught Valero probably half a dozen times in the last 6 months where we we recognize opportunities and we see 6-point moves, 7-point moves, 8-point moves. We've caught all these. Now we have no Valero position. We're waiting to buy it again. But these are the edges that you have. Meanwhile, you look here. Where's Valero? Right back where it started. Go back to September. Where's Valero? Same spot. But if you could read the edges, you see the opportunities that, the only reason I'm seeing these opportunities, because I was taught how to see these. Okay, I'm no friggin' magician over here. But when you see these at time to time, there's ways to make money. We're not, like we said, this is not an investable market right now. It's a market that you can trade or take advantage of when they have extensions. So here's a perfect example. Valero's in the exact same spot. We've taken out 5, 6, 7, 8 points in this thing, easily a half a dozen times, probably from here on. So you're talking about the last 6 months. I don't know, let's say 5 points, 6 times. Sounds like we took 30, 40, 50 points out of Valero in the last 6 months. And where is it now? It's right back where it started. These are the edges that we have. Okay, you can't do that with Google. You can't do that with Apple. You can't do that with NVIDIA. Okay, because it's the same story. If you go to the analysts, you read about it, they're going to give you the same story. If Google is 200, 150, 100, or 250, it's the same story. Okay, so they can't justify it. If I lose money, I know I lost money. If I make money, I could justify it. I could justify the moves because these are things I've been involved in. That's our edge.
We have a question from G&G Tech Services. I saw your soybean videos this week. What made you pick soybeans?
Good, very good. I'm glad you looked at soybean. Now, commodities are different, okay? This is something I was totally involved. The grain market is getting itself cheap. Okay, overall the grains are getting cheap. And this is also because the world looks like exports and imports are going to change, and we're a big exporter of grains. So we figure if we're going to start with the tariffs, we're going to create friction. So we're not going to have that customer. We're not going to have the global customers. Fine. But if soybeans are $13, if corn is $6, if wheat is $7, it's a different story. When you get down here, they're getting into value areas. And they also get in the market with a sentiment. So we look for beans. We've been watching beans for about a week and a half. We waited for our spot. And we got into beans and we wanted to trade them. Okay, I'm going to show you what we got in. Okay, you get to these areas where you see how the market goes down and it pushes and pushes. Then you get to a little bit of a technical area. All the chart does is tell me what you're thinking. So we got to the spot. We bought soybeans. Then we said we got a shot to trade these a little if you get to these targets. So we got to the target. So we sold our soybeans right there. Good. We're out of our soybeans. Next trade. You want to know something? You know what the next trade is? We're watching the other grains. Excuse me. You want to know one that we got out of soybeans? You know what the next one is? Corn. Okay? Same thing. Get to value areas. Okay? If you're bearish up here, it makes sense. When you get bearish down here, it sounds like you're after the fact. So what do? We bought corn. And we actually corn, think about the market yesterday. The whole board was red. Corn closed on its highs. So I think we're going to be in good shape in corn. So this is the way we look at markets.
We have another question from Matisse. Gold miners did not take a serious profit in a while, but how do you avoid getting whipsaw in miners looking to trade gold miners?
Why would you whipsaw it? See, that gold is a little different. We've had a passion in gold. Gold has given you a lot of head fakes, where if you were long gold and you look at the markets, you say, okay, it's time to get out, because the market overall looks like that. But we have a passion. What I've seen happen in gold in the last couple of years, I've never seen for decades. So no matter on any pullback, it's okay, I'm still bullish. So I won't get whipsaw because I'm in these. But you know the way I trade around gold miners is that I look at I do my homework. Okay, not every gold miner is the same. Some gold miners, they take the gold and they hold it, and which kind of keeps them intrinsic. Some miners know it's in the mine and they go get financing, so it's a passive way. Some trade back and forth. They trade with gold. So I put it in a basket. I buy 4, 5, or 6 gold stocks, 4, 5, or 6 silver stocks. And I don't get whipsaw because the ones I want to trade, when the market goes higher, I'll sell those out. Ones I want to say marry because they're investable, I have them the whole way. I'll give you an example. Okay, let's do this since we got you on here. Okay, last year, we don't have it on now. This was one of the ones we married. We were long this from, we were long AGI from here. Excuse me. Okay. We were long AGI from here. This is one we did not sell. You know when we sold this? We sold it in December. When we got up to here, we sold all our AGI. So we caught this whole ride up. Why? Because that was the one we liked a lot. That's why we had that one on. Okay? Other ones we trade around. What do we just get out of this week? We get out of our NGD, one that we've had on for a while. This is one we want to navigate. Okay? We just got out of our NGD. So we're out of our NGD. But you say you catch these rides? That's the way I trade around the miners.
Yeah.
Okay. All right, this was first one here. We're going to try to do this every Saturday morning, same time, 10 a.m. We're going to work on doing it on Wednesday mornings at 8 a.m. Okay? I think staying live. You know what the thing is? I think you want to join. You want to join the group. You know why the group? Because the group, they're such a nice group, professionals, beginners, intermediates have all gone past that level. They all understand the lingo. They're all very friendly. We're all making money. I can say whatever I want about myself. They're all kind of looking over my shoulder, putting the trades on. Well, the market is getting, in a nice way of saying they're getting pasted. Who's up over 40% this year? Not me, we. Okay, that's what we're doing. And the edges are there. And we know when to avoid and when not. All right, so I'll see you guys next Saturday at 10 a.m. We're not sure about Wednesday, but we'll send it out to you guys. If you want to join, it's RNTR.
Yep.
Okay, if you're looking to join the group, RNTR.trading. Okay, you join and we call you. Okay, if someone's looking for money or anything like that, that's not us. A lot of copycats lately. But if you want to join, RNTR.trading.
All right. And we have one question here. Are you doing this again on TikTok in 5 minutes?
Yes, we are. Every Saturday, 10:30 for the last how many years?
We'll see you on TikTok, guys.
Yes. See you in a little while, guys. Bye-bye.